there's going to be a price to pay for Sam Bankman-Fried. So it's clear that at the core of the issue is that he stole $8 billion from FTX investors, and he dumped it over at Alameda, and he lost it through reckless trading. And I think that that's a pretty clear case to be made. And we've recently seen his cohort, Caroline, co-founder. She's been spotted in New York City. It looks like she's cutting a deal.
I saw her in Soho.
Yeah, in Soho. It looks like she's going to cut a deal with the New York prosecutor.
Timothy Maxwell Keiser, an American broadcaster and Bitcoin investor, shed light on the actions of huge crypto fraudsters like Sam Bankman-Fried. He unveiled Sam's part in the scandals, which negatively affected the economy. The main part of Sam's Bankman's fraud is the creation of his own token play money called FTT. He managed to create this currency without tying it to anything underlying, which gave it value despite what Keiser said. Keiser mentioned the names of many well-known individuals who invested in this failed organization. The list includes NFL legend Tom Brady, NBA star Stephen Curry, Hall of Fame David Ortiz, billionaire entrepreneur Mark Cuban, NBA legend Shaquille O'Neal, Amelia B., comedian Larry David, and more. The celebrities are now underwater, facing lawsuits for supporting the company before it hit bankruptcy. The individuals lost billions after the humiliating failure of FTX. The SEC is being heavily criticized for meeting with Mr. Bankman to talk about the new trading company. He is also questioned for ignoring the red flags with the previous executive, which led to huge losses for the investors of the company. In his recent tweet, Max Keiser quoted another Bitcoin preacher, Michael Saylor, former CEO and founder of MicroStrategy. He talked about CFTC picking Bitcoin as a commodity among all the other crypto assets. Keiser also mentioned his constant support for Bitcoin since 2011, when it appeared mysteriously from Satoshi Nakamoto. Now let's dive into Keiser's thoughts on the collapse of FTX. Like the video and subscribe for more information on Bitcoin.
The Sam Bankman-Fried story and FTX and FTT, which is their token, and Alameda, which is kind of the hedge fund, Alameda Research, that they created back in 2017. So Sam Bankman-Fried came out of a company called Jane Capital, and he comes from the very shadowy world, the very shady world of high-frequency trading and kind of the shadow banking system and the market making that's done kind of in the gray regulatory zone. And there's a lot of these firms that exist on the periphery. There's a lot of debate whether they're actually engaged in lawful activities or not. But that's where he came from. So he came out of Jane Capital. He started Alameda Research, which is another one of these market-making, high-frequency trading, arbitrage, chop shops that are very fringe in terms of whether they're legal or not legal. They exist kind of on the periphery. And he was engaged in a lot of skullduggery over there at Alameda. Then they decided to start their own exchange, FTX. And they lobbied very hard in the Bahamas, where they felt that they would get very little regulatory oversight. They went ahead and they bought 10% of IEX, which is another one of these shady peripheral exchanges, to give themselves regulatory legitimacy. They then floated a token called FTT, which is part of the whole scam token world that we've been talking about for a number of years, whether it's Ethereum or Cardano or FTT or XRP. These are just scam tokens. And he used that and listed it on other scammy exchanges to create a price, and then using that as collateral to buy assets like real estate in the Bahamas. And now, as all Ponzi schemes eventually do, they run out of kind of runway, and they crash and burn. So it is similar to Bernie Madoff in that respect. It's also similar to the 2008 financial crisis, where Wall Street spun out of thin air all these derivative contracts, and they created this multi-trillion-dollar Ponzi scheme that blew up finally in 2008, and with the help of the Fed and central banks to bail out all the crooked bankers once again. So there's a lot of similarities to that. There's similarities to the S&L crisis of the late 1970s, early 1980s, I should note that the S&L crisis, which is a similar crisis of using federal money to backstop a fraud, William K. Black, who was a regulator at the time, he put 1,000 bankers in jail. And we haven't seen anybody with that kind of rigorous regulatory oversight in 40 years. There hasn't been any rigorous financial oversight in the United States and around the world. And if you're not going to enforce laws, you're inviting these problems. So the regulators have really some answers that they need to fill in. And so it's kind of a continuation, Daniela, of multi-decade scammy, fraud, banking nightmare.
Keiser also mentioned the future of Bitcoin Rise. The 21 million Bitcoin Rise is the Bitcoin supply program introduced by the creator Satoshi Nakamoto. There is a process called Bitcoin halving, where the amount of Bitcoin mined gets cut in half. With more than 18 million Bitcoins already mined, the remaining 3 million will take many more years. Bitcoin halving takes place once every 4 years. As the last halving took place in May 2020, the next halving will occur in 2024. Currently, there is no way known to mankind to increase the limited number of Bitcoin that are mined. Many other digital currencies reach trillions and quadrillions of coins with every passing year. Keiser shared the key reason why Bitcoin is likely to hit 220,000. Keiser believes that the high growth of the Bitcoin price will be preceded by the massive growth of Bitcoin's hash rate. On January 2nd, the Bitcoin hash rate spiked to a historic high of 203.5 hashes, while Bitcoin was trading at the $47,000 level across centralized exchanges. By now, Bitcoin has lost more than half of that value, exchanging hands at 17,770.
Talk about the damage done to Bitcoin.
No damage.
No damage.
No, the network has never been healthier. The network has never been stronger. Bitcoin, first and foremost, is a network. Network stability over price stability. And Bitcoin was something that was discovered in 2008. It was dropped onto the web in 2009. It has extremely interesting properties. One of those properties is that when prices are down, it attracts a lot of critics and it attracts a lot of attacks, which could then fuel the conviction of the people who are actually investing in the network. Investments in the Bitcoin network have never been higher. That means the security has never been higher, and price will take care of itself. So like Tim, the VC out, Tim Draper, reiterated his $250,000 call for Bitcoin in 2023. I concur with that entirely. Don't worry, the price will take care of itself. What we want to make sure is that the network is stable, and this Sam Bankman-Fried scandal never touched the network. The network is still TikTok next block. There's no problem. And the amount of money being poured into the network, that is into the hash rate, into the mining, into the security, has never been higher. It's running at 240 quintillion hashes per second, or calculations per second, which is an all-time high, close to an all-time high. And I think that Bitcoin is a wily beast, and sometimes I think it just likes to drop in value to pull out the scammers, to pull out the Mashinskis and the Kevin O'Learys and the Mike Novogratz. The scammers out there, they get exposed and then they get wiped out, and then they won't have any money to buy Bitcoin. So don't worry about Bitcoin. Worry about yourself.
I'll tell you why I worry.
Bitcoin will still be here when all these guys are gone.
But when I say people are worried, right, investors, right, who are looking at the crypto space as a whole and calling me and saying, I don't know what's going to happen to Bitcoin now. There's a huge question mark surrounding the fate of Bitcoin. Why should I believe that Bitcoin is still going to be around? Why is this technology going to beat everything else? Why can't something come out better than Bitcoin? And I have to say, the experts I've had on recently, I don't feel there's been anyone who's been able to properly answer that question yet. So can you answer it today?
Right, well, I don't know anyone who's worried about it. The Bitcoin maximalists have been telling you that all these other coins are scams for years. So if you lost money with the scammers, shame on you, because you got greedy. So nothing I can do about that.
Now you're aware of investors' massive support behind Bitcoin and how the FTX scandal has changed things. Along with paving the path for regulators, it played a significant part in the increasing criticism towards Bitcoin. But as Keiser said, no damage has been done to Bitcoin. This is a stepping stone for the network, and it has never been stronger before. Subscribe for more videos like this and comment your views on this FTX fiasco.